Meta stock is moving in the after hours after the company announced their Q2 revenue. Folks, they also gave us Q3 guidance as well. We'll talk about where that lined up based on Wall Street estimates, where shares of Meta could potentially be going forward. From a technical perspective, I think you've got plays to the upside in this one. We'll talk about it. Now, there is going to be a sentence on the press release that is going to be glossed over by many. We'll talk about what that is, what companies it could impact, and how this could potentially impact Meta stock going forward. Also, we had today Federal Reserve saying a rate cut coming as soon as September. I tell you what, that's music to the ears of small businesses, and small businesses are the one advertising a ton on Meta platforms. What is going on, investors? Hopefully, you guys are doing well out there. We're talking about a big one here today. Meta Platforms reported their Q2 earnings. I tell you what, year-to-date shares of Meta are flying up 34% over the past year, up nearly 50%. The company announced those Q2 revenues at $39.07 billion. That was 22% growth year over year. More importantly than that is we got guidance for that third quarter, $38.5 to $41 billion on that revenue. You might ask, well, where did that stand based on what Wall Street expectations were? Well, Wall Street was expecting 39.18. The high-end estimate was $41 billion. So Meta already crossing over into the high-end estimate based on their range. My guess is these estimates will be adjusted as we move into the third quarter, and you'll probably get $40.5 billion as the estimate for Meta. As we move into Q4, $45 billion. Moving into next year, you got $40 billion every single quarter. This company is pushing that ad load on to their customers, and people are clicking and they are buying. Now, here's what was very interesting on the financials is they gave us capital expenditures. And we've seen this with Google. We've seen this with Microsoft. These companies are spending kind of in the mid-teens, 12, 13, $14 billion a quarter on data centers. Well, Meta's maybe a half notch behind that. They're going to spend $37 to $40 billion this year. Their previous range was for $35 to $40 billion. So what Meta didn't do was raise the high end of $40 billion. But here's the sentence that I think a lot of people are going to underestimate how this is going to become maybe not necessarily an issue, but a talking point as we move into Q3 and certainly Q4 for Meta. The company says while we continue to refine our plans for next year, they're planting the seed in all the analysts' heads right now. We currently expect significant capital expenditure growth in 2025 as we invest to support our artificial intelligence research and our product development. When we come over here and look at the financials, we'll see the run rate they were on this quarter. And then we also know where Google, we know where Microsoft is. And so we got to expect Meta probably won't be in that tier, but they'll be pretty close. And they've already planted the seed. We're not going to do $37 to $40 billion in capital expenditures next year. We're probably going to do 45 to 50, although we'll get the range from Meta probably sometime next quarter or later this year. Now, in terms of revenue, it's just been absolutely fantastic for this company. Hats off to everybody involved as they've just continued to drive more and more revenue from these social media apps. $32 billion in revenue last year, all the way up to that $39 billion. That was 22% growth, beat expectations, and you got to expect with this third quarter guidance coming maybe as high as $41 billion and some change, things are going to be really good from a profit perspective. Now, what all of the tech companies is doing is they all took a cue from Elon Musk. He took a ton of heat for firing, I think it was like 80% of Twitter's staff. Well, everybody else has done that in Silicon Valley. Look at your marketing sales. You drove your revenue up 22% over the last year. But look at this. Marketing sales went from 3.2 down to 2.7. Look at your general administrative from 4.1 to 3.7. There's probably even some restructuring charges, some severance charges in here as well. So imagine when you roll into next quarter and to next year, you're probably just going to see a flatlining of these expenses. Now, you did see an increase in research and development from 9.4 up to 10.5, and your cost of revenue as well continuing to tick up. So your total costs and expenses did drive up from 22% 22.6 to 24.2, but it's offset totally by your increases in revenue. Here's your income from operations. This is the line to focus on. You could come down to net income, but I tell you what, there wasn't even a line in this press release saying, absent any changes to our tax landscape, we expect our full year 2024 tax rate to be in the mid-teens. Well, there is one candidate that is running on raising corporate taxes. So that shows up in net income because you have this provision for income taxes. That's something that Meta really doesn't have a lot of control over. And so when I look at businesses, I focus primarily on this income from operations from 9.4 up to about $14.9 billion. You see for the 6 months, you're basically on kind of that run rate of about $14 billion of operating income. It's just absolutely fantastic. Look at where you were last year, $16 billion. From a cash balance sheet perspective, some cash has left the building. When we get to cash flow, we'll show you where that went. If you include receivables and some prepaid expenses, the company has about $76 billion of almost cash. Last year, it was closer to about $85 billion. They do have some long-term debt, but I mean, they're about to lower interest rates. So these companies are probably all going to go on a refinancing, probably even go out and borrow some fresh money if they need to. Now, Meta pulling down an impressive 3-month total of $13.5 billion. Depreciation line items on the cash flow statement, those are going to be gigantic as you're buying these data center GPUs and you depreciate them over probably 4, 5, 6, maybe even 10 years or so. Here's your stock-based compensation. Here's your net cash provided by your operating activities, $19.4 billion. Last year, it was still an impressive 17.3. So here's what we talked about, how the company is basically telegraphing. And I actually like this from Meta, that they're getting out in front of this. Instead of dropping the bomb on investors and analysts in Q4, they're kind of seasoning you a little bit and saying, look, we're going to refine our plans for next year, but we're going to spend a boatload of money. If you thought $37 to $40 billion is a lot, well, we're going to expect significant capital expenditure growth in 2025. So we're going to spend even more. So one thing you can do is take a cue on where they are at right now, $8 billion or $8.2 billion on purchase of property, plant, and equipment. Annualize this number out and you're getting to, can't believe I'm saying this, but only $32 billion. So you're going to see a meaningful acceleration for Meta as you move into the back half of this year, certainly next year as well, when more and more GPU supply kind of catches up with demand. There's obviously some supply constraints there. We heard that with AMD when they did their conference call. We'll hear it again, time and time again with NVIDIA and other chip makers. Well, that supply should start catching up a little bit in January and early next year. And so you're going to see a massive acceleration. And so that is certainly bullish for anybody in the chip industry, particularly the NVIDIAs, the AMDs, the Broadcoms of the world. Anybody who thinks those rallies are starting to lose a little bit of steam, well, Meta and Microsoft and Google are basically throwing a wet towel over that. Now, the company is continuing to spend some of their other operating cash flow on repurchasing the common stock. Notice $6.3 billion in shares this most recent quarter. Last year, they only did $900 million. Look for the first 6 months of this year, $21 billion worth of buybacks. And they also started that dividend, which is only about $1.3 billion. So this dividend, when it laps or as you get close to the lapping of when they announce this dividend, they'll likely increase it probably meaningfully. My guess is meaningfully probably at least 20 to 30% because they can easily cover that even as they continue to expend more and more on their capital expenditures. Now, the one rub that we always have with Meta is the Reality Labs business. Some people might make the argument, well, this is feeding some of the AI stuff. I don't know. And also, you're losing quite a bit of money, although we did see positive revenue growth in the most recent quarter from $276 million up to $353 million. And again, on a company worth over $1 trillion, on a company that is going to do $38.5 to $41 billion in revenue next quarter, $350 million is just not a lot. They can drop that on the ground at Menlo Park and nobody's going to notice at Meta other than Mark, who might need another gold chain. Notice the profit profit in that lab went from 3.7 to 4.5 negative. So off of $350 million in revenue, you lost $4.5 billion. I know the company is thinking about making some investments in Luxottica. Well, I tell you what, given how much they've burned on Reality Labs, they could have just bought that company outright over the past couple of years based on what they're spending. Also, it's potential that Reality Labs certainly develops a meaningful product, but you do see over the past year, they've lost over $16 billion on that business, where their ad business is just humming right along. Over the past 6 months, you've made $37 billion in operating profit, almost $20 billion in the most recent quarter. Now, I think you've got further upside to go with Meta. More recently, we've made 2 higher highs. I think this one's destined to probably come up here and retest these highs again at 540, maybe even higher, make a new high at 550. So that means even in the after hours at $500 per share, I think you probably still got another 10% higher on this one before the technical chart gets a little played out. For the most part, what we're monitoring, though, with Meta, can they come to the high end of the $41 billion? Can they even beat that in the Q3? There's going to be a lot of people that believe that. I think that is going to send the shares higher. There's others that are going to really enjoy that, not only the spending this year on CapEx, but they're going to expect significant growth in 2025. There's going to be a lot of people who appreciate that. But the big beneficiaries of all of this is going to be the chip makers. They are going to see huge inflows from Google, Microsoft, Meta, and others, and the semiconductor index, which is still up huge over the past year and year to date, probably will continue to move higher. Folks, that was Meta's Q2 results. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.